Let me tell you right now, something big is coming tomorrow. Here in this video, we are going to be going over your CPI estimates or CPI estimates, whatever you want to call it, from your major banks and investment institutions. What are their estimates? And if CPI comes in high, what's going to happen? If it comes in low, what's going to happen? I think we can get a little bit of an insight to what the number could be based on how equities performed, the VIX performed today, certain areas of our markets like AI stocks and small caps. It was a weird day. We'll recap all of that here in this video, go over my expectations for CPI tomorrow, and talk about Tesla stock. What's actually happening with Tesla stock today? Gary Black points out something that is notable, and he thinks it's quite strange as well that Tesla sold off about 3% today. We have a jam-packed video for you. Hit the like button and subscribe to the channel. It is the only thing in the world you are not taxed on, believe it or not. Let's go ahead and get started. Okay, before we get into what's weird about equities today and give you a recap of what happened, which you need to understand this, we had some things said today by young Biden and even Fed officials that really makes me raise an eyebrow for tomorrow's data report. I mean, maybe it's just nothing, but this is from Carl Quintanilla from CNBC. You know, this guy has been doing the show for like 25 years now, 24 years to be more specific. He says this is from Bloomberg. He says some Federal Reserve officials who were surprised by inflation's rapid descent in 2023 seem to be setting a new bar for interest rate cuts, a broader pullback in price pressures. This article says Fed officials eye broadening disinflation as new rate cut test. Barkin and Fed Collins wants further inflation progress in services. That's pretty interesting. They're saying this the day before CPI is released, and Fed Jerome Powell told us that Fed governors sometimes get major data reports a day or two early. That really makes you wonder. Is services going to be hot on this CPI report? If that's the case, that's a big negative. The only two things people really care about with the CPI report is rents and services. We've actually seen some progress on service disinflation recently. Rents are still the sticky part, but then again, you can make the argument that rent prices are probably not going to fall until the Fed starts cutting rates so homeowners can refinance and charge less for rents. But that's a topic for another video. But the thing that really made me raise an eyebrow today, and shit, I can raise that left eyebrow pretty dang high, and trust me, it was pretty high when I seen this. Biden said we're calling on corporations to pass savings on to consumers. Now, yeah, that really makes me turn an eyebrow to the north, because what the heck are you doing, Biden, the day before CPI is coming out, and you're basically telling us we're probably going to see more inflation in that report. They're trying to soften the blow a little bit and call on companies to essentially cut prices. I mean, if these are not signs that inflation is probably going to come in hotter than expected tomorrow, I don't know what else is. Now, this is really hard for me to say because I personally think inflation is going to come in lower than expectations or at expectations. I'm not actually expecting a big beat to CPI, but then when I look at these things, it's like my logic is defied. All of the checks that I do on a daily and weekly basis show inflation continues to moderate. But then you get red flags from two Federal Reserve officials today and the president, all of which are individuals that likely already know what the CPI report is. Then you mix in what happened to equity markets today, and it gets a whole lot weirder. So what happened today was the NASDAQ fell about 1/3%, which, keep in mind, the S&P and the NASDAQ, when you hear the S&P and the NASDAQ, what moves those indexes are your top 10 largest names. They have like 40% of the market weighting. Microsoft and Apple both are roughly 10%. So they're 20% of the indexes right there, especially in the NASDAQ. So you really seen your big tech names fall today. Apple, Microsoft, Google, Amazon, even Nvidia, including this 0.5% down move in after hours, all of them were red. Most of them were red in excess of over 1% today. At the same time, the Russell 2000 was up 1.75%. So just looking at this off of face value, markets tend to have more knowledge than retail investors. And by markets, I really mean hedge funds, institutions like, Jamie Dimon or something managing JP Morgan and longtime CEO, or Citadel's Ken Griffin or XYZ, whoever else you can think of that's a billionaire. They probably know someone that knows what the CPI report's going to be tomorrow. So when I look at this underperformance of the NASDAQ, outperformance of the Russell 2000, it shows a broadening of the markets. It shows your interest rate sensitive names did well today. Looking at the money today and the outperformance of the Russell 2000, that would actually support a lower than expected CPI report coming out tomorrow. So it's like you have the Fed and the president, which likely already know the numbers, not saying, but strongly hinting towards there's more work to do on inflation. It's probably going to come in a little bit hotter than expected. You got them over here. You got the markets over here saying, hey, we're going to buy interest rate sensitive names, likely suggesting inflation is going to come in lower than expectations. What the heck? Now, I will also tell you there was some massive hedging that took place today. So I think that leans, again, more so towards maybe a hotter than expected inflation report. You had the VIX up 7.73% today. If you guys have ever watched the VIX, or if you've watched this channel, the VIX up almost 8% when the S&P's down 0.09% is off the charts bearish. For anyone that does not know, the VIX is simply a tool that you use to measure volatility. Now, what is volatility? It measures the puts to calls. So today, there was a lot more puts being bought than calls. VIX goes higher. That's why when markets crash, people buy puts, the VIX tends to spike. So when you add all of this information together, it really doesn't make a whole lot of sense. We also have Tom Lee with Fundstrat. He just shared the post that I tagged him in. It was originally from this guy. He says Fundstrat and his tireless research team are basically perma-right over the long run. At least that is his experience. I said literally, well, everyone was laughing in 2022. Now everyone thinks they are a genius. But this original post is about small caps, and Tom Lee is very bullish on small caps, even heading into tomorrow, which he is the most accurate analyst on Wall Street. So you got to give him some credit there. And that also makes me think maybe the Russell will perform good tomorrow. I think the easiest conclusion that I could make is the rest of the markets have really not participated in the all-time highs that we just seen in the S&P. If you look at any other stock that's not AI related, or I guess just AI related in some form or another, or specific sectors of healthcare, specific stocks in healthcare, your average stock is not at all-time highs. I could make the argument that maybe you're seeing this hedging taking place on the S&P and the NASDAQ, because even if we get a better than expected CPI report, those stocks could probably fall, your big tech names, because if inflation falls faster than expected, well, you would want to own your sensitive names to interest rates, your Russell 2000 names. But then again, I could also make the argument that if you see inflation come in hotter than expected, the Russell 2000 names are likely already priced for that. They're already priced for bad news, at least most of them. So still buying the Russell 2000 could make sense even if inflation does uptick, because you're so exhausted on the headline S&P 500 and NASDAQ level because the leadership has been the top 10 biggest names out there, or again, select stocks in healthcare and any stock that really says they're AI. So I don't really know. I'll go over my expectations later on in this video for what the numbers are actually going to be tomorrow. But let me know down below in the comment section. What do you think? And on that note, thank you for doing that. And let's look at what big banks and institutions think about tomorrow's data report. But first, before we do that, Tesla stock today was very strange. Down about 3% in regular trading. You would expect, if the Russell is up almost 2%, Tesla would be doing very well because Tesla has been more so correlated to the Russell and not as much to the NASDAQ or the S&P 500. So that was strange, but what Gary Black just said really makes me raise an eyebrow again. Gary Black says today, it seems to me that the $15 billion hit today on Tesla's valuation is a bit much for a 2-month price cut of $1,000 on US Model Ys, which might cost Tesla $65 million in lost profits in 2024. So 230x is essentially the loss that you've seen in Tesla stock today. Unless the market is assuming Tesla management will repeat this short-term promo every quarter. From my knowledge, this is the first temporary price cut we've ever seen from Tesla, and there's no reason to assume that this is going to happen again. Which, I mean, going back to the argument that I just made on hotter than expected CPI reports, Tesla stock would inevitably sell off. And that's kind of what you've seen today. Maybe this pre-CPI jitters that the markets were feeling today was just a little bit more extreme in Tesla because of this $1,000 price cut. But, I mean, 3%, $15 billion loss to Tesla's market cap, again, it just doesn't make a whole lot of sense. All of this leads me to believe tomorrow is going to be an absolute shit show for our markets. Okay, so Nick Timmerhouse shared us this chart of your investment banks that have their opinions for CPI. And here we have a guest star for the rest of today's video. His name is Emerson. He's about 9 months old. I'm a single father, so he's crying, he's teething, but I want to get this video out nonetheless. And he's a daddy's boy, so what am I going to do? I'm not going to let him cry. He's going to sit in the dang video with me, and I really honestly don't care who doesn't like it or doesn't approve. So if you have a negative comment about it, just save it, okay? Thank you. Appreciate it for the patience, because I know it's distracting. I do understand that aspect of it. But nonetheless, here's a chart of expectations for CPI. Headline CPI, don't even look at this side. Markets may react to it a little bit. Don't look at it. It's not going to change the Fed and Fed policy. I mean, just imagine if we had a big spike to oil, is that going to change what the Fed is going to do? No, but you could, in theory, you know, at that point, see a spike in headline CPI. You want to look at your core CPI because that excludes food and energy, things the Fed cannot directly control. And I think it's a little bit less about your year-over-year number, although your year-over-year number, this column here, is one of the big headlines that goes across like terminals and news wires that algorithms trade off of. I don't think your year-over-year number is going to be a problem, though. If you do get a problem, it's probably going to be in your month-over-month number. So the lowest estimate we have here is from Citigroup, and that is 0.17%. Now, the decimals here matter. This would round up to 0.2%. So nobody is expecting 0.14 or lower because that would round down to 0.1%. So nobody's expecting 0.1%. If that were to happen, that would be a, I guess, reverse black swan event, if you would. It would really show everyone was wrong. Inflation is decelerating a lot faster than expectations, and I think the broad markets would rally. I think you'd see 99% of stocks in the green tomorrow. Your highest estimate on Wall Street is from Goldman Sachs. And surprisingly, Goldman Sachs tends to be the most accurate every time. This is what's a little alarming about this. Goldman Sachs is way higher than other, firms, and they are at 0.38%. That would round to 0.4% month over month. Your second highest estimate is TD Securities. They tend to be wrong pretty much every time. Their estimate is 0.34%, and that would round down to 0.3. JP Morgan sitting at 0.22. That would come in at 0.2%. That would actually be better than expected. But all of these other estimates, Bank of America is 0.29%, Barclays 0.29%, Deutsche Bank 0.27%, Morgan Stanley 0.26%, Nomura at 0.29%. All of those estimates would round to 0.3%. UBS's estimate would round to 0.2%. So Citigroup, JP Morgan, and UBS essentially have their estimate at 0.2%. TD Securities Namara, Deutsche Bank, Barclays, and Bank of America have their estimates at about 0.3%, if we're accounting for the rounding that will take place. Goldman Sachs is the only bank that has their estimate at 0.4%, and Goldman Sachs is also 3.9% on a year-over-year basis. Most firms are around 3.8%. Some of them, like Citi, Deutsche, JP Morgan, Morgan Stanley, and UBS, are at about 3.7%. So 3.7%, that's roughly the overall estimate. Now, if you guys want to take a look at this chart, do so for yourselves on the X account. It's called Michael Tyler. Check it out. It should be pretty easy to find. And go ahead and give it a follow and check out this chart for yourselves. Now, the previous month for December, you came in month over month of 0.31%. So if you get a number higher than that, that's going to show a slight acceleration on CPI. Now, if you get like a 0.43, that would be a bigger problem. I'm not expecting anything that high, even if we do come in high. I think probably Goldman Sachs would be more so correct on the high side. You have a median forecast of 0.28%. That would, again, round up to 0.3, but the percentage is important here because 0.26 is going to look the same on the headline as 0.3 because it's going to get rounded. Or if you come in at, 0.28 or 0.29, there is a difference here in, what the actual point is that the CPI comes out at. Because I think it's pretty safe to say, coming in at 0.25% or coming in at 0.29%, they're going to look like the same 0.3% number because of the rounding effect, but they're pretty different numbers. So yeah, we're kind of in a little bit of a pickle here considering some of these estimates, or at least we could be coming tomorrow. Now, that is all of the data that we're going to get for the US tomorrow. So it's all going to be about the CPI report. Now, my personal opinion is we could actually come in around 0.2%. Now, it would probably be, again, going back to this chart, we probably would come in at like 0.23% and get rounded down to about 0.2%. But then again, when I look at how the markets reacted today, what Biden said, what the Fed officials said, maybe CPI could come in 0.38% around Goldman Sachs estimate and get rounded to 0.4%. If that happens, yeah, we have a big problem on our hands. And again, in theory, that would make sense why Tesla's stock was down about 3% today. Hotter than expected CPI is never going to be good for Tesla. Now, what also makes the situation a little bit more interesting is on your just broad market basis, your S&P, your NASDAQ, your index level. It's being carried by the top 10 or so, largest companies out there. NVIDIA, Apple, Microsoft, right? You know the names. Well, you've run so much that maybe even a, slightly hotter CPI report could be really bad news. You never really know. Take a look at ANET earnings. ANET just reported much better than expected earnings. Their guidance came in line with Wall Street's estimates, like exactly, and the stock still sold off 7%. This is because it is a high-flying AI name. It was trading at all-time highs before earnings, and subsequently fell 7%, even though it was a grade A quarter. Same thing with Cadence Design Systems. They had another great quarter. They were trading at all-time highs, another AI hypey name, along with ANET, Arista Networks is the actual company, and they also fell about 6% here in after-hours trading. This does not look good heading into NVIDIA earnings, which will be next week. Subsequently, based on these two AI stocks falling, even on good earnings, they still fell. NVIDIA is down about 0.5% here in after hours. So maybe this earnings is going to be kind of the same as we seen last time with NVIDIA. Like, no matter how good the numbers are, NVIDIA stock might sell off. Even last earnings, NVIDIA shocked everyone again, raised guidance huge, beat on EPS, beat on revenue, beat on margins, literally everything. A grade A++++ quarter, and the stock still sold off 2.5% the next day. Could this be a little bit more dramatic this time around, especially if there is some weakness in data centers like AMD, like Intel said? Potentially. And that's a problem we're not going to have this week, but coming next week. Now, coming tomorrow morning, we will have some earnings from Shopify, Datadog, Coca-Cola, Biogen, Marriott International, Hasbro, Moody's, and some other names. And then tomorrow and after hours, Airbnb, Upstart, Robinhood, Lyft, MGM Resorts, Zillow, Zillow Group, Instacart, and some other smaller names. And then later on in the week, Wednesday after hours, you have Twilio, Fastly, HubSpot, Upwork, QuantumScape, Thursday pre-market, Crocs, that's one of my holdings as well. Thursday and after hours, DraftKings, Coinbase, Roku, Trade Desk, DoorDash, Toast, Open Door, and other names as well. These are just the most widely anticipated earnings. So there is still quite a bit of earnings to go. And it looks like he was starting to get sick of me. Seriously, shout out to the single parents out there because holy crap. It is a challenge. Nonetheless, with Tesla stock today, it does look like there is more short positions now than there previously was. You went from 2.91% short interest of free float to 3.28% short interest of free float. And the dollar amount sold short jumped about $3 billion from $14.6 billion to $17.6 billion just over the past couple of days. So there has been a lot of shorting activity in Tesla stock. And even today, cost to borrow fees around 10% also say there's probably still a lot of shorting activity, and that's probably a main contributor to why Tesla stock sold off 3% today. At the same time, from hedge funds and institutions, it was actually pretty good today in the options market for Tesla stock. You had 699 orders or trades totaling $597 million with a positive order value of 62%. So yeah, the situation's getting weirder and weirder by the day. Now, for Tesla stock, if CPI comes in around 0.4%, again, even like a 0.34%, that wouldn't quite get rounded to 0.4%, but still higher than 0.3%, that could also be seen as bad news. So you really want to look at what the actual number is and not just necessarily go off of what the headline number is that you're going to see on your newswire, on your terminal, or wherever you get your news. In the event we have hotter than expected CPI, I think it's almost a certainty Tesla stock could fall back to about 180. I think this is a tried and true tested level of support at this moment in time. I don't personally think, unless we get some kind of huge disaster tomorrow, Tesla stock's going to break under 180. In the event that we get better than expected CPI, I do think Tesla could see a 4 to 5% day tomorrow. Now, a 4% day from here would put Tesla stock at about 195. A 5% day tomorrow would put Tesla stock at about 197. And still, I do think there's a lot more potential upside here than downside for Tesla. Like if the markets come falling apart, I think your ultimate low would be around 150. That is what, about $37 of downside from here. Whereas I think Tesla stock potentially ends at all-time highs by the end of this year if we get rate cuts, if the economy holds up, as Tesla demand continues to hold up, as we do get rate cuts and it becomes more affordable to get your hands on a Tesla. And if I am correct, then Tesla has started to make the change to focus on profitability. I mean, the sky is literally the limit here, but I think the downside is pretty limited. So in the grand scope of things, as a long-term investor in Tesla stock, I hope Tesla sells off like a rock falling off of a cliff tomorrow, because I would love to buy more shares of Tesla. And I think it just shows people every time, when people are so negative on Tesla, when Tesla hits support levels and finds ultimate support, tested support, Tesla tends to bounce quite a bit. Nonetheless, guys, let me know what you think about this information down below in the comment section. What is your estimate for CPI coming out tomorrow? And what kind of effect do you think it will have for our markets? And how do you explain what we've seen today with the Russell rising almost 2%, NASDAQ, S&P closing in the red, the VIX up 7%, what Biden said, what the Fed officials said? It'll make your head spin. There's not one just conclusive kind of direction it's pointing in. There's different things firing on massive ratios today. Like 2% in the Russell is a huge move. 7% of the VIX, huge freaking move. Let me know what you think this means down below in the comment section. Thank you for watching. If you guys would like to come trade with me live in real time, I have some trades on some of these stocks we talked about here in this video. Check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.